All right, we're recording. That's it.
Happy
We reached
Monday.
one and then zero.
Happy
Happy
Monday.
Monday. Happy Monday. It's June 23rd, 2025, and it is Monday. We are going to kick it off with some talks about the markets, what happened last week, looking at this week, a little bit more flexible, a little bit more laid back this week. The summer is a laid back time. It just is what it is. We got kids running around the house screaming, it's hard to focus for long periods of time. But we'll let you, our resident support team member, take our disclosures, and then we'll get into it.
He's hating on my headset. He's hating on my headset, which I've started to use the more that, I spend a lot more time on the phone. It is comfortable. But yes, it does make me I did time. Hey, I did a sentence in a call center years ago back in
That's true. I forgot about
2007,
that. 2008, 2007,
2008.
and 2008.
Yeah, I worked for a mortgage company at the
Who,
beginning and
who
through
are
the
you
middle.
again? They will
No,
remain nameless.
No, they shall remain nameless. Nameless. I worked in a subprime department in the middle of the subprime crisis. So my 2 years there felt like an eternity. It was crazy. So I'm actually getting PTSD as we sit here thinking about it. But yeah, so just everybody keep in mind everything we discuss is for educational, entertainment purposes, not to be taken as specific individual investment advice. Always reach out to a financial advisor you trust. And hopefully that's us, momentumwealth.us. Feel free to reach out for a free consultation. And there we go. But yeah, let's get kicked off. We've had the last week kind of felt like 2 or 3 weeks. A lot of data, a lot of things to focus on and to shift your attention from one topic to the other. Pretty exciting stuff. We had some military action, which sometimes leads to market turmoil. Not really seeing that today. So even though people over the weekend thought that, as humans do, that market goes down every time there's a negative news headline, we're not really seeing that. Some very interesting things happening in the robotics, artificial intelligence space since the start of June. I'd love to talk about that as well. But what do you got for us in the weekend review?
Yeah, let's look at the week in review. Let's look at 6/16, so June 16th last week. Short trading week, right? We closed on Thursday. Market was closed on Thursday. Um, S&P down 0.16, NASDAQ down 0.02, basically flat. Dow Jones up 0.04. Again, we would consider that sort of flat. Russell 2000 really the winner of the week, 0.43%. I told, we've been talking about the Russell 2000 for a long time. I've held personally in an account some Russell 2000 shares of an ETF for a long time, a very long time. And was sort of laughed to myself because what was it last week or the week before? I sold some of it, thinking, "Man, what's going to happen with the Russell 2000?" Well, that's all you need. So you're welcome, people that have experienced the gain in the Russell 2000. It was probably because I sold some of mine. That's usually the catalyst. When I buy something or sell something, the stock moves whichever way I don't want it to move.
That always seems to be the case on personal investing, and it's what Garrett's really pointing to there is especially in the crypto sphere, what we as of professional money managers would refer to as the degenerate trading space. That's always kind of the meme and the joke is every time somebody on Robinhood would buy $1,000 of a crypto, it goes down to like $10, and whenever they sell it $10, it
Yeah,
goes up to 1,000. So that's what he's referring to for those of you who may not be well informed on the meme space and kind of the retail investor
get the joke.
strategy. Yeah, but sometimes that does happen, and that's fine. And when you're rebalancing your portfolio and you're looking at data, a lot of times that happens. But what matters is the long run. I still think that when the conditions are right, and this is not investment advice and this is not reflective of the portfolios that we manage, but I do believe that you're going to have a good catch up run with the Russell 2000 at some point, and it's going to be substantial. It may happen very similar to how gold performed, where we had a period of time where people just scratched their heads. This makes no sense. Why? Everything on a fundamental basis would lead you to believe that gold was going to go up, and it was only when the technicals flipped. And when the technicals flipped, which is just a phrase to think of when we're using our data to determine portfolios, when that data comes in and reinforces that thesis, that's when you actually start to see price movements. Russell 2000 may operate very similar, this bull run, where fundamentally everything may start to line up. And it's only when the technicals flip that you're going to see that catch up to the S&P's performance.
Well, we saw something similar. Was it 2023, maybe 2024, when we saw that period of time where it just kind of took off and then it wasn't sustained, so it kind of fell back. But
Mm-hmm.
hopefully it'll be sustained this time. Speaking of
Yep.
gold, though, we look at gold last week down 1.95%, silver down 0.76%, 10-year bond up 0.33. Again, price 0.33 up. Bitcoin down 0.75, which with Bitcoin, I would really consider that to be flat. We've kind of staved off. I think what are we, 105 or something we're hovering around
Yeah. Yeah.
now.
Pretty little price action. We did have movement, like you mentioned, in the 10-year Treasury. We are now seeing kind of a precipitous, slow fall of those interest rates on the 10-year. And I don't know, if we break 4.25, I think that is the winking that the Fed has done, which is so, the Fed last week, we don't know. Our dot plot is 50 basis points, which is two small cuts. By the end of the year, we're unsure. Then on Friday, you had a Fed chair, not the Fed chair. You had a Fed president say we're probably going to cut in July. Today, you had another one come out and say, yeah, we're probably going to cut in July. So a lot of wanting to get both sides of it, but I think the data that came out Friday is really the straw that's going to break the camel's back of the hawks on the Federal Reserve Board, as it is, well believed at this point by most market participants. The rate path is down. Catch up with the EU. The EU was cut 10 times, far ahead of us. But that's also not uncommon to see. The Federal Reserve is generally the last outside of a crisis, kind of the last to catch up to trend. If you look at the major world central banks, develop a trend line, the Federal Reserve generally lags that for reasons that may be plausible, others nonsensical. But it looks like we're going to start getting some rate cuts. And then I'm holding to my bias in this. It is going to be more than 50 basis points. It's probably going to be 100 basis points before the end of the year. And I don't think that's going to be on the back of noticeably negative news. I think it's just going to be on the back that as they balance that employment mandate with inflation, that especially when you back out the housing calculation and how they do it, is pretty tame and or close to their sacred altar of 2%. So I think it's the employment struggle. And like you've mentioned before, how do you balance those two out? Well, it's pretty simple. If you don't want unemployment, you lower interest rates.
Well, we're seeing some unemployment, even with our own client population. We're seeing some layoffs and things like that. So it's starting to happen. The other thing
And
you
how
have
much,
is,
just real quick too, how much of the coming unemployment that may be almost counter-cyclical to GDP growth, if some expectations are right and we have back to trend, or maybe we exceed trend of GDP growth, how much of the unemployment that we're going to see is kind of counter to that narrative that could be caused, especially in middle management, by artificial intelligence and the advent of AI in the workplace, how it's creating the ability for one person to do the job of 4 or 5 people. Will we see that strain of unemployment really be caused by AI? It's very possible.
yeah, that's an interesting conversation, probably one that we could have on its own face, because I think that what you might see is a lot of short-term job loss due to that, but over a longer term, I think it will start to correct itself to be more of a balance rather than all in on one way or the other, because there are certainly shortfalls that AI has, and they will become more apparent as more people are relying on it. Even over the weekend, MIT came out with a study about basically what happens to your brain on ChatGPT. You're seeing half of your brain function turn off, people that have like long-term deeply active chat gpt users. And I get that. I mean, I spend a lot of time in chat gpt. That's kind of my chosen large language model.
Are you admitting to
Um,
us that you're fighting with half your brain tied behind your back? Are you
No, I can understand it. That's
openly?
what I'm admitting to you. I can see the potential of it because it is a very good tool. And like prompting it, I was talking to somebody about that over the weekend. When you write a prompt for one of these language models, it's almost an art. You have to figure out how to do it because you're not going to get what you want on the first or the second or the third or the fourth time, and you're probably not going to get, it all together. It has to be compiled over a long period, like a session is what I would use to describe it, a chat GPT session. You're prompting, 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 you're refining. And then you end up with something that's usable, maybe not directly from the thing, but that's just my personal use with it. I'm not building out systems with it. I'm not building out agents with it. So there's a whole nother host of work that goes into that side of it. But I just know that, I mean, they look at this is like super philosophical, but like the creative human mind cannot be matched by an AI. And it's going to become more evident as it's put more and more and more into practice that there has to be some sort of balance that's struck. And a lot of these companies that did kind of go all in with AI and fired a ton of people are now slowly coming to the realization that they have to hire back. Maybe not as much as they
Mm.
let go, but maybe a certain workforce to kind of spearhead the more creative efforts. So it's an
Yeah, I mean,
interesting
it's
conversation.
yeah, I heard about that. I was having some conversation with some people over the weekend about it, culminating in a conversation I had with my 13-year-old last night. I think that I would push back on the implication, I guess, of people taking that narrative completely to heart, just a little bit, in saying that, we can look back in human history and we can say, okay, what have humans lost the art or the ability of, right? I mean, survival is, for thousands of years, knowing how to simply walk or ride a horse from one town to the next and be able to survive while you got there was paramount. Most people, 99.99% of people, cannot do that. They can't trap their dinner, clean it, start a fire, and cook it. And that's paramount to human survival, but we don't need to do that now. The same thing with maps. How many people, me included, and I always thought I was good with directions, but I go to various parts of the South quite frequently. And if you just said, hey, no phone, nothing, no self driving, I need you to get in this vehicle and I need you to go to Mobile. Okay, well, that's a big city. I probably could do that just from paying attention to the signs. Or I need you to drive to,
Wetumpka. Let's go to Wetumpka.
yeah. How? What is like? Or even I
Yeah.
need you to get to this. I need you to get to this hotel, or I need you to get to this terminal at the airport. How many people could do that? And you would say, well, people are losing the ability to navigate. Well, no, we navigate better now than we ever have. It's just we're leveraging technology and we're not having to use that part of our brain. The question is, what will your brain then do? It's like saying, well, if
Yeah, but
people,
that's a narrow scope. Like mapping is a narrow spot. Mapping, that's what it is. ChatGPT has sort of implications that go across everything, industries, like common things, non-common things. It's, I'm not arguing about the
yeah, and I would
the
just say that
goodness of it or the
the
helpfulness of it.
the all that aside, culminating in the conversation with my teenagers, just simply saying that knowledge going forward for your generation is not going to be on necessarily pattern recognition and memorization. It's going to be on knowing how to ask the right question. And we implement that in our firm all the time. The biggest value add that you can bring to clients is knowing the right questions to ask. And it's the same thing if we think about AI, we think about the large language models, Chat, Grok, the Gemini. It's really it's only going to add value. Now, entertainment and all that stuff aside, it's only going to add value to your life and your personal enrichment and the quality of your life if you know how to ask the right questions. It's the formation of questions and curiosity and trying to solve that. The old model of the memorization and pattern recognition, I think, is going to be less useful. It's going to be those that are able to truly try to identify ways to solve real world problems using artificial intelligence by being inquisitive and being focused on the right question. That's my sermon. Donations
I
are
would I
welcome.
would add a secondary part to that because you still do have to know context, especially with these early state. Maybe it will get
Yeah.
better. Hopefully it will get better. But if you type in something, last week I was creating like a schedule. We're launching a new podcast where we talk to business owners. We're launching, I'm trying to figure out schedules of how to post what and when to post what. So I'm generating a lot of content and generating a lot of things through these large language models. Wanted a schedule for this week. It said it said Monday was June 24th. And it built out the whole schedule based on that. So the entire prompt of what I put in, the entire response was incorrect. It was wrong. So if I hadn't known that, if I hadn't looked to see, oh, well, I can look at a calendar and see that that's not right. You need to update that. So you have to prompt it and say, hey, that's not right. Take another look at that. I think I said, take another look at those dates or something. And then it was like, oh, yeah, you're right. So I don't know, like, you can't just trust implicitly everything that spits out of it, because even like with some of the economic stuff, we generate a lot of the show notes for this type show through, it helps us a lot with what we do, but it's not, you can't take it at face value, because some of the things it generates, economic things, ask it about some economic event or calendar or something, it'll give you a spin, but it's not necessarily the right spin. So you still have to have the knowledge in the back of your mind that, hey, that doesn't sound right to me. Let's double check that. Is that
Yeah.
right? And then it turns out, oh, it's
Yeah.
not right.
Yeah.
So it
Context.
can't just be
Yeah.
about asking the questions. It also has to be about knowing. You have to be a little bit informed, I guess. Otherwise, you're going to kind of show your weakness there,
Well, it's
that
like the
you're
early.
totally reliant on these models.
It's like the early internet. People say you can't believe what you read on the internet. Well, now you can believe what you read on the internet, but it's based upon the source, how you navigate
Right.
and can separate the wheat from the chaff. Yeah, it's great point. Great point. And yeah, we can't let the artificial gods take over, but we should definitely, as time goes on, we all want to leverage the technology, and it's quite profound and powerful. I saw RoboTaxi launched. I haven't paid too much attention
Mm-hmm.
to the RoboTaxi launch, simply because as somebody that uses essentially a RoboTaxi every day, it's not really. It's just kind of par for the course because I use it every day. But I have noticed a lot of improvements over the last month. Still minor, kind of minor weird things to me, but nothing.
So there was a couple of
You know,
videos that came out from the rides that were where it has a decision to make and it's not really confident in the decision that it makes. But it's one video clip that I've seen posted a million different times. So out of all of the rides that they had lined up, it seems like overall it was a pretty good success. Tesla stock's up over 10% today. So I think that
oh yeah,
investors would agree with that. I think that a lot of people, I mean, we can pull it up too and see what Uber's doing, but a lot of people, Uber's down today. It's down less than 1%, but it is, still at 40% year to date.
yeah. I don't know.
You
It's
look at,
hard to bet. It's hard to bet on those things, and that always comes back to chasing narratives. It's hard to assume. I would think logically that ride hailing is going to be disrupted in ways that most people don't expect. But that doesn't mean that, who knows? Uber could make an order of 10,000 of these products and dominate the ride hailing business and make a wonderful profit with not having a driver. That could be what happens, or it could not. Now, there's another robo-taxi company that's been very capital intensive, not really had much ability to scale. What's the name of it's got cameras all over them.
Waymo.
Yes, Waymo. So there's always,
Yeah,
I
I
mean,
saw
it's
one of
going to
those
be,
in Atlanta.
I've seen
Actually, I
one
didn't know they
too.
were in
Yeah.
Atlanta.
Yeah, I've seen it. It was a Jaguar crossover,
Yeah.
white. Maybe we may have seen the same one.
Yeah, it's a different
Yeah.
technology. I mean, and Elon Musk has been on the warpath against that sort of technology. That's the kind of default position that Tesla had years ago, which is sensors, sensor, sensor, put
Yeah.
sensors everywhere on the camera. And then they pivoted to the visual type camera approach that I think is actually going to work out better. And I think most companies are discovering that
Yeah.
it's going to work out better.
I was talking to guy high up at GM last week, and from my understanding, and I do not, well, I'm not sure. I'm just going to say that there's the rumors are that I mean, I don't. When people tell you things, I'm always super cautious. But rumors. This is a plant worker, been there a long time, and the rumors are that GM has either killed or is considering killing the majority of those sensors as they adapt, as Ford has talked about, as they adapt to the reality. And I've driven in FSD with older models and new. The sensors, it makes it incredibly indecisive. There's no differentiation between a cardboard bag and a shadow or whatever. But with visual, with it purely being visual and no lidar, it's very close to human driving. And I would say, maybe 10% of the time it does something kind of odd, nothing dangerous. I've not, in fact, I'm not going to be all hyperbolic and say it saved my life, but there are two instances where it did avoid a collision that I could not have reacted fast enough. One person pulling out in front, and the other person without a blinker just getting over into the lane. Um, and you could already tell by the shape of their vehicle they had not been one to avoid collision. So both times it reacted quicker than I could react, and all the quirkiness is just wrong lane change or uh, things that a human driver does all the time, but when you're not driving, you're extra alert to. So, for instance, like ignoring fog lines as it turns, it has no problem. Humans do it all the time. You get over it, like if you have a turn lane and you have those diagonal yellow lines, that's basically saying, "Hey, a turn lane's about to be here, but it's not here yet." It ignores that and just gets right into the turn lane. Things like that I'm sure will improve over time. But it's incredible to see this type of technology continue to evolve and provide value to investors. And it's not going to be, it may be one or two players take most, like in the internet, but I think there's going to be a lot of people to benefit. And I'm not confident that I would bet against Uber or Lyft. If I were that type of investor, I don't know if I have that degree of confidence at this point in time to just go ahead and declare ride hailing dead as we know it.
No, there's going to be a time process, and it may be that Uber has to transition. But there's going to be a learning curve. Not everybody's going to want to get into a vehicle that has no driver. Most people, may want to stick with the Uber experience, and it's a proven experience. I don't know that they're in the short term, maybe long term, but yeah, it's going to be
Yeah,
interesting to kind of
and we'll
watch and look at.
we'll report back because I know I know that the refresh model that I purchased is supposed to be able to opt in to the fleet once they flip on towards the end of the year. I'm definitely going to do it just as a test. I just want to see how it operates. I'm just going to get in the back seat and let's just see. I'll put my life on the line for our clients and investors to learn more about the technology. But no, I will try it in
That's interesting if you
some
can
downtown
even do
areas.
that. I wonder if you can ride hail your own vehicle.
I would think so. I would think you should be able to get in, hit the app, and sit in the back and let it take you
Well, the
somewhere.
app connects to your Tesla account, so it's going to know that it's your vehicle.
Maybe I can make my wife do it.
Well, she also has access to the vehicle.
You'll have to do it. You'll have to get in mind and do it. I'll let you be the
Yeah, I
guinea
guess
pig.
I guess
Yeah.
that could work. Yeah,
Yeah.
I don't know how I feel about that though. It's probably going to get a wreck or something. A first wreck in the country with the ride sharing, be on the news.
Yeah. Well, I
Anyway,
mean, it's very interesting though. But yeah, just just to kind of wrap on the tech side of things, you want to be working with a firm that while using a data driven approach that's agnostic to biases, personal opinions, you want to be working with a firm that is forward thinking, that keeps an open mind. The answer to new opportunities cannot always be no. No may be the appropriate and right answer some of the times, but you have to be open minded and very educated and immersed in every opportunity that's out there for investors. Because even if you are a buy and hold index investor, understanding the opportunities that are underlying the mega cap stocks in your index is going to give you confidence to stay on your investment plan as you continue to build and compound wealth. And it's going to make you less likely to get nervous or jump out when there's negative headline news.
yep. Yeah, I think that's right. Well, we don't have too much going on this week. We'll keep it short this week, but I would say that the underlying message, we're still frothy in the markets, but I think that progress has been made, and I would assume that um, even if there's a short-term hit to some of the stuff going on in the Middle East, I don't. Historically, at least, it doesn't really generally affect it long term. We may see a little bit more volatility in the short term, which we could expect anyway. Normally, it does happen at the end of June, toward the end of June. So we'll see how the next quarter brings, what the next quarter brings us. But I'm optimistic about kind of where we're going heading into the end of the year. Obviously, you can't account for things you can't account for. Knock on wood, black
Yeah,
swan events, that sort of thing. But
yeah,
just we're not from a standpoint of looking at the market. We're not in a spot where we were in the beginning of the year or the March or whenever we started feeling the downturn. I
yeah,
think we're on the other side of that. So
yeah.
I would look to see uh, more positive construction there.
Yeah, I think so. I think the structure of the market has improved significantly. I think we're seeing tariff negotiations surprise to the upside. Where uh, tax relief appears to be incoming, generally good for markets. The biggest impact we may see this bull cycle could be deregulation. We've seen that happen before. In fact, that was Fed Chair Bowman or Fed. I don't the proper way. I apologize, people. I think it's the Fed President Bowman. She was mentioning this morning about deregulation and how that's now coming into their calculation with understanding why there may not be seeing tariffs bleed through to CPI. We all have opinions on that, but it's very very high level and sophisticated perspective on things, because a lot of times deregulation, nobody sees. There's not a dollar amount that says, "Hey, we're going to change this regulation, so ergo everybody's going to get an extra $1,000." But you have a compounded material effect on the price throughputs to customers, clients, as a result of the cost of regulation coming down. So we may could see that happening. But I agree with you. I think that structure is getting very strong, if not stronger than it was at the beginning of the year. Because instead of things being on hype and hope, now we have reality, and people can then begin to plan accordingly with a better measuring stick of what the short to medium term is going to be.
Yeah, and the other thing I would say, just real quick before we end it, would be, whatever happens with oil. There's been some, there's been some talk about Strait of Hormuz, or however you say that, being shut down by Iran. A lot of oil flows through there. So we've seen things like this happen in the past. The difference here now is that, we export so much oil that maybe the effects of that are going to be minimal at best. We're certainly not seeing that. I mean, the futures you see kind of go crazy, but then when the market actually opens, it kind of levels itself out. So I don't know how much stock to put into that, but that is at least one other area to keep an eye on, because that will infect. I mean, not infect. I mean, maybe infect, but it will affect. Those readings of inflation too, energy, all that kind of goes
That's
into
all.
that as well.
Yeah, that's a strong possibility. I tend to lean towards the fact that it's going to be a nothing burger, only because one, what you said is true on our ability to produce oil and export, and then second, the Saudis have a vested interest in the Iranian regime not existing. So I think that they're willing to pump as much oil as possible to take away that leverage from that particular regime. So we'll see. Very interesting. Uh, Geopolitical discussions generally need to happen later in the evening with a glass of wine, not something that you want to do early in the morning or in the middle of the day. So we'll see. But yeah, I think that I would lean towards not really there, but the risk is always there. The risk is always there, especially with oil being as volatile as it is, and the ability to speculate in commodities, especially using leverage, is enormous. So yeah, we have to pay very close attention to that.
Yep. All right. Well, I'll let you go, and we will be back here next week. Hopefully, one of these days we'll get back into the studio where we're
Studio.
sitting across from each other. We get the headphones. I miss all that kind of feel. But we've got some
Yeah.
exciting things happening over the next week. Got a new podcast launching next week. So, yeah, lots of things happening. Summer ticking right on. Be over before we know it. Back in
Yeah.
school.
Back in school. I
Kids will
can't
be
wait.
back in school.
That's my summer. When school starts is my summer.
Oh my goodness. Hope your kids watch this. All right. We'll see you later.
All righty. Everybody take
Bye
care.
bye.